All right, let's be honest. When you think about making big returns, what comes to mind? Probably chasing the next hot meme coin, right? Or you're on the other side, just letting your assets sit in a savings account, earning practically nothing. Well, today we're going to break down a hidden strategy for earning over 100% APY on assets you already know and trust. Think Bitcoin, even silver. And the craziest part, it actually gets more profitable when the market is freaking out. Let's get into it.
So just think about the vibe in the market right now. There's a lot of uncertainty, a lot of nervousness. But what if we've been looking at it all wrong? I mean, what if that signal that tells most people to sell everything and run for the hills is actually a huge flashing green light for a totally different way to earn?
To really see what I'm talking about, we have to start with some data. And honestly, this kind of challenges the whole crypto narrative that we're used to.
Now have a look at this leaderboard. You see Circle and MicroStrategy up there, and okay, that makes sense. They're basically crypto native. But what in the world is that name in third place? Silver. An ETF for a precious metal is pulling in 113% APY. How is that even possible? This is a prime example of a blue chip asset that most crypto investors just completely ignore.
Well, the answer, in one word, is volatility. You see, silver's caught in this perfect storm right now. Demand from huge industries like solar, EVs, and AI is just outpacing the supply from mining. It's also trying to play catch-up to gold's big rally. And with all the global tensions, people are treating it as a safe haven asset. All of this chaos, it creates a massive amount of trading, which is the secret ingredient we're looking for.
So, okay, we've got this super volatile, high-yielding asset. But now let's zoom out and look at the bigger picture, because the mood of the market is what makes this whole thing feel so backwards.
The Fear and Greed Index is sitting at 8, and that's not just fear, that is extreme fear. This number tells you that the market is under some serious stress, and a lot of people out there are feeling very, very nervous.
And you know what? That makes total sense. If you're a normal investor making directional bets, buying something hoping it'll go up, then extreme fear is a giant flashing red light. It's a signal to get defensive and protect your money.
But, and this is the key to everything, for a different kind of player, a liquidity provider, that same extreme fear signal means something completely different. It means it's game time.
So a directional trader sees fear, and their goal is to avoid losing money. But a liquidity provider, or an LP, sees that same fear and calls it maximum repositioning. See, when fear is high, everybody's making a move. People are panic selling, they're buying the dip, they're shorting, they're closing longs. All of that churn is pure trading activity.
And here's exactly how it works. Some market event happens, news, fear, whatever, and it causes all these traders to scramble and reposition their portfolios. That drives trading volume through the roof. And since LPs earn a small fee on every single trade, high volume means high yield. Seriously, think of it like owning the toll booth on a busy highway. You don't care where the cars are going, you just collect a little fee from every single one that drives by. More panic equals more traffic, which equals more tolls in your pocket.
And hey, this isn't just some weird thing happening with silver. If we go back and look at our leaderboard, you see this pattern playing out everywhere. It's all tied directly to what's happening in the news.
Just look at the other top earners here. Circle is cranking out 137% APY because traders are still shuffling their positions around after their latest earnings report. MicroStrategy is at 117% because Michael Saylor just bought another boatload of Bitcoin, causing a frenzy of trades. And Bitcoin itself is at over 50% as it keeps knocking on the door of that $70,000 resistance level. The assets making headlines are the ones making yield.
Now, it's super important to get this. These triple-digit yields aren't going to last forever. They are a window of opportunity. There's this thing called volatility decay. Basically, once the news dies down and an asset's price settles into a new, stable range, the trading volume cools off and so does the APY. Gold is the perfect example of this in action. Last week, when it was having its big rally, LPs were earning a sweet 45.5% APY. This week, the price has stabilized a bit, and that yield has decayed down to 22.2%. I mean, still an amazing return, but you can literally see how that peak opportunity has already started to fade.
So what's the big takeaway here? Well, it's that you don't have to choose between gambling on sketchy meme coins and letting your money fall asleep in a savings account. There's a really powerful middle ground, earning fantastic yield on high-quality assets you already know and understand.
There's this quote from the source material by a land maker that just hits the nail on the head. The underlying assets aren't exotic. They're things you already understand. We're not talking about some obscure tokens you've never heard of. We are talking about Bitcoin, MicroStrategy, Circle. These are assets with active stories that drive the trading volume, that ultimately pays the liquidity providers.
Let's make this really tangible. So you have some USDC just sitting in a savings account. You might be getting, 4% APY. But that exact same USDC, if you use it to provide liquidity for Circle, could be earning you 137% APY this week. Why? Because you're putting it to work in an active market. You're giving the traders the liquidity they need, and believe me, they are paying you very well for it.
And looking ahead, the really cool thing about this strategy is that you can often see these volatility events coming from a mile away, even if you don't know what the outcome will be. And the next big one, it's just a few days away.
On March 17th and 18th, the Federal Reserve is meeting, and any kind of surprise, whether they sound hawkish or dovish, is guaranteed to cause some sharp moves in the market. A hawkish surprise could send safe havens like gold and silver flying. A dovish surprise could light a rocket under crypto and other risk assets.
And this, right here, is the most powerful part. With this strategy, you do not need a crystal ball. You don't have to predict what the Fed's going to do. All you need to know is that whatever they do, it's going to create trading volume. And by being positioned as a liquidity provider, you're all set up to earn from that activity no matter which way the market breaks.
So I guess that's the final question, isn't it? You know the news is coming, you know it's going to cause the markets to move, and you know that all that movement generates yield. You don't have to predict the news, but are you positioned to profit from it? Something to think about. Thanks for joining me for this explainer.